Okay, welcome back to episode 4 now of Bitcoin Treasury Companies, or BTCTCs as they're known in the industry. So they've been all the rage, and if you haven't seen the first 3 episodes, I'll just kind of bring you up to speed here. I've got a spreadsheet that we're using to try to aggregate all of the data that's out there, and there's a lot of good data, and it can be overwhelming because we've gone from 30 companies doing this to now 130 doing this. We just came off of uh, the quarterly earnings call from Strategy and Saylor and team. Um, they have given new guidance as far as not hitting the MNAV below 2.5 and really even below 4. They're going to take it easy on it. So just a lot of information that comes at us. It's a flood every single week. Um, I myself have changed columns, moved things around on here. Um, Again, just trying to get a quick visualization and always making this better so we can make good decisions. Because not every company that's doing this, let's be realistic, will be successful most likely. It reminds me of the ICO hype of 2017. We're really seeing that again, where you have a lot of these zombie companies that really don't have a lot going for them on their day-to-day business activities, and so they are moving into a Bitcoin treasury, right? They're putting all their assets. Not only that, they're looking for ways to raise capital so that they can arbitrage the difference between basically what these companies are trying to do is Bitcoin has an average rate of return of, call it 40%, right? And even if you wanted to say lower as we go on, as Bitcoin grows, it's a $2 trillion market right now. And when you get that large, you're going to see less and less volatility over time. A lot of the complaint in the early days of Bitcoin was, oh, it's too volatile, right? Um, and as Saylor has said numerous times, that volatility is vitality, right? You could take fire, for example, and you can burn your house down with it, or you can use it to heat things, you can use it to cook things, and to survive. So it's how it's being used as well. But basically, what's happening is companies are speculating by taking the arbitrage between the 30 to 40% annualized returns of Bitcoin, and they're basically, like, for instance, Strategy is borrowing it, call it 10% by putting out these preferred instruments that they have. Stride, Strike, Strife, Stretch, and they all vary. It's a yield curve, but just to keep it simple for things here, because we're talking about a lot of companies, I just want to keep this like overall to the industry. Let's just call it 10%. So if they're able to earn 30 to 40%, okay, on their Bitcoin holdings, minus the 10%, we'll call it, that they pay out, well, that's a 20 to 30% realized profit annually, right? And so their whole business is arbitraging the difference in the rate of return from Bitcoin versus what it cost them in fiat dollars, if you will. So last week, I know I had mentioned that I had removed Kango. I put them back on. I just made up for it by including their debt. And so, like, if you look at their leverage ratio, um, you'll see it's a lot higher. So that just encapsulates their risk, right? So obviously, I would have them as a sell. And in fact, I've only got a handful of companies on here that are buys right now. So if we look at recommendations here, I've only got, you can see from Fold, Smarter Web Company, the Blockchain Group, which is now capital B. They also have a new ticker. Saquon's, surprisingly Bit Deer, and we'll get to that as to why in a minute. Clean Spark as well. Mara, the largest mining company in the world, and now the largest Bitcoin holdings outside of Strategy, of course. Metaplanet for a lot of reasons, including that they operate in the Japanese market, which gives them an edge. And then, of course, Strategy, which has the largest moat, and no one's going to catch them. And again, just as a visual reminder, when we look at this, here's Strategy at almost 70%. Like there's 628,000 plus Bitcoin holdings. Look at that, how it's just dwarfs the rest. I mean, you can take all the other companies combined, and it's, you know, it's a fraction of what Strategy has. Okay, so there's just a reminder there. So I am constantly moving these buy, sell, and holds, but what I wanted to talk about today was actually those with levers, the most levers. And so if I filter this and sort it by levers, and again, what is a lever? The levers available, I've added a new tab here to talk about this. So, by the way, there's an explanation tab for all of these, right? And so the overall explanation is the levers available in column W. This is the number of ways a company can add Bitcoin to its balance sheet. That can be from cash from operations, counting as one lever. They can be mining, that counts as a lever. Convertible bonds, warrants, pipe deals. That was the new thing that we learned this week that many companies are doing, including Saquon's. So there's been a lot of talk around pipe deals. Obviously, people are, if you're in the industry, you're familiar with the ATM as being a major way that players can accumulate Bitcoin through hitting the ATM. And then I've got preferred stocks 1 plus N. So with Strategy having 4, that gives them obviously 4 levers right there alone. So I wanted to, again, come back. Let's look at these public companies here. This is the number of ways, the levers, that they can accumulate and add Bitcoin to their balance sheet. So we've got Strategy with 7 plus, in the green, of course. We got Metaplanet with 6, Mara with 5, Clean Spark with 5, BitDeer with 5, Riot with 5, Galaxy with 5, and then rounding out those with 5 or more levers is ProCap Financial, which also is under a new ticker now. That's BRR. So just because they have the number of levers, though, doesn't automatically mean that it's a buy. As you can see, I've got 3 of these listed as sells currently, and that's because there's a lot of factors, right? So as we are going to sift through all the data and all the noise that comes along with this, and it's coming at us quick. Lots of new companies that are entering into Bitcoin treasuries. I want to look at who has enough levers. So who has 5 levers or more? Who has at least $1 billion so they can issue preferreds? Because that's really where you need to be. And we've heard there was a great call this week, if you haven't listened, that the Saquon's X Twitter group hosted, and Ben Workman actually joined that call, and it was very informative. But I'll just kind of sum it up that when you're under $1 billion and you're a small market cap, right, like a Saquon's, going out and getting into preferred, you're not going to be able to raise that kind of capital debt the way that you can if you're a larger company like Strategy. So that's why it's so important to get to that threshold of being a, quote, mid to large company of at least $1 billion. And the easiest way to do that until you get to that size is through these pipe deals, these private investments, which is basically just issuing shares out and then capital comes in. So when you have these pipe deals to account for, you're going to see a lot of shares then hit the market. And I do account for that. I account for that in column E, the number of shares. Okay. So we could sort by number of shares. We can look at this in any way we wanted to. But to stay on track today, I just wanted to focus on, and again, we have regulatory risks, we have liquidity risks, the dilution to the shares risk. So all that plays into X community size. So if you've got a large community size on X, if the CEO is very um, I guess, transparent. Like, for instance, the Smarter Web Company today, they're putting out a lengthy weekly tweet, just letting investors know what to expect, where they're at. Like, all those things are being played into how I'm looking at recommendations for this. But at the end of the day, if you don't have at least 5 levers, you're going to be stuck. So let me give you an example. My next biggest holding behind, in full transparency, behind strategy is Semler. I love what Semler's doing. They added Natalie Brunell to the board and Joe Burnett as the director of Bitcoin. So they're doing great things, but being that they're still a small market cap, they're under that $1 billion, right? They are not yet in a place where they can go out and do preferred shares like a strategy. And so that limits their ability to really get the BTC torque ramped up and get this thing going at a high speed to create shareholder value. I still really like what they're doing, but because they're not there yet from the size and scope, and they don't have those 5 levers, I've got them as a hold. So I love them, and I love their trajectory and what they're doing, and they got to 5,000 Bitcoins rather quickly. So they got a lot of good metrics. They've got an MNAV that's relatively low for the industry. It's almost, and actually on their site, it's showing at like 1.06. It's probably a differential in how I have their debt. They have their debt showing on their website at 100 million, but then I'm adding cash back in here, or subtracting that out, and I wasn't exactly clear. But again, relative to everyone else, if we were to look at this, that 1.17 still shows up in green. So they have a lot of great metrics going for them. But what I want to focus on is the companies, again, that are at least 5 levers, and that they've got the size and the scope that they can have preferred shares, because that is the most accretive. That is the way to win. It is clear. That's where strategy is. They're looking to, retire their loans and their convertibles, and they're really going to only have out there in the debt the preferred shares, which again are the most accretive to shareholders. So having these levers is basically going to be my new threshold. If you're not at 5, I'm probably going to put it in a place where I wouldn't recommend being a buy. Saquon's and Capital B being the exception this week, because I've got to really hear through how much of those, and again, not to get too in the weeds here, but Saquon's had a large pipe deal which put a lot of shares into the market, and so calculating that was rather challenging if you didn't know what was going on behind the scenes. And I'll just say there's a lot of support in those shares at $1.40. For instance, I'll read a couple of my notes that I had on there. They've got their pipe shares were like 140 million, converts at another 90 million. That gets you to 229 million. They had pre-existing shares of around 142 million. So taking all that together, that's like 372 million shares. I'm backing that back down because this is where it gets complex, right? Because those original pipe shares were at $1.40 each, and so we've seen most of that clear out now. So like the people that were going, in other words, that were going to sell, they sold once it hit 140, and then the converts, once it hit 210, were able to sell as well. And so if you remember, we had that run up on Saquon's to like $6 or $7 briefly, and then it came crashing back down, right? I say all that to say that most, and again, this is what we have heard from people like Ben and others in the space, that most of that has already kind of been flushed out. So the people that were going to sell have sold into the stronger hands that are now playing this. So I've got an exception, right? Like, it's not a hard and fast rule that if they don't have the 5, I wouldn't say buy, but where we're at with them, I do have them as a buy, and we hope that they can get to that $1 billion. So for instance, with the number of shares they have out there, if they can get to $2.42 a share based on current holdings, if they had nothing else, diluted no more, and the Bitcoin price stayed the same, that was just flat and did nothing else, at 242 a share, they would have a market cap of around $1 billion. And then they're at that point where, and Ben said it himself, they're not going to have to do more of the pipe deals where they're just flooding the market with shares to get that capital. So again, they have laid the groundwork. They've put the run. You got to have a runway first before you can fly, and then you got to get in the air and you got to keep the engine going and not stalled out. So that's another conversation as well. But Saquon's is close to being there, which is why I have them as a buy, similar to Capital B, the blockchain, formerly known as the blockchain group. All right, so let's talk about these levers and why they're important, as I alluded to earlier in this conversation. So let's go ahead and look, and you'll see I have these kind of talked about, each summarized here. So if you want to go in and look, you can see who has what levers and what they are. So strategy at the top has 7 levers, and what are they? They were at the beginning they were doing margin loans, which they have mentioned retiring on the quarterly call the other day. Convertible notes, the ATM, everyone's favorite, and then the biggest differential is that they have built a yield curve. Okay, they've built out a complete yield curve with 4 preferred shares, and I expect them to add to that. They mentioned on their call that Stretch, the newest preferred, that's a 9%, basically money market fund paying 9%. That dividend will come down, obviously, but having that stable coin, that money market, if you will, is their iPhone moment. Because you're going to see a lot of, when cash, rather than just sit on the sidelines, cash can just sit in their monthly paying short duration Stretch STRC preferred share. And so because of that, that is a huge advantage, right? So they've got 4 prefs. They're going to add more. They basically have already built a yield curve with those 4. They'll add more. Then you have MetaPlanet. MetaPlanet is making all kinds of noise, and it makes sense because they have cash, bonds, moving strike equity, stock rights, income on their Bitcoin holdings. And they're talking about principal investments, leveraging volatility, and then the hope of possibly acquiring companies. Because I mentioned earlier, some of these companies will not make it through the bear market. Strategy has already made it through a bear market. They have, as they say, a PhD in a bear market, and the price of Bitcoin could go down 80% tonight, and they would still be fine and they could still pay out every one of the dividends on these 4 preferred shares without a problem. And even at 90% of a drawdown in Bitcoin, which would be crazy at this point, but even then, Saylor said they can move stuff around and they would still be able to get by for a while. So again, incredibly strong balance sheet, much stronger and over levered than, and over collateralized, I should say, than any other company out there. So MetaPlanet comes in close as well. And again, I'm just pointing out the leveraging of the volatility. That's another way to increase your Bitcoin holdings. Galaxy Digital with 5 levers. The rest of these have 5. Okay, so these 2 stand out. So I would definitely say buy on both of those, and then the rest will probably be just dependent on all other factors. But Riot also has a credit facility that they opened up with Coinbase. Now it's small, but it's another lever that they have, which is helpful. So they're not always just hitting the ATM. Again, these guys are all miners, right? So mining is the purest way to add the Bitcoin, right, to the balance sheet. And so you have Mara, which is like a hybrid at this point. They're the largest miner. They're not the most efficient miner, but they are recognizing that, and they have done convertibles, cash, ATM, and they're also doing BTC lending. And so if you're lending out Bitcoin on part or all of your Bitcoin position. That's another way that they're going to be able to make money if you trust that. Now, this is where you can get into issues like we saw with BlockFi, and we saw the whole FTX and everything blow up during the last bull run. So this is going to add levers, but it's also going to add, when you get into lending, it's also going to add more risk. So I'd rather see the levers come from the yield curve being built out. And Metaplanet, by the way, just announced this week, in fact, that they are doing preferred stock now. And so that preferred stock, again, is the most accretive way to help build Bitcoin and value for the shareholders. And finally, CleanSpark. They have it as well. And they also mentioned on their last quarterly earnings call recently that they plan on, and they've already kind of put their foot in the water here. They're dipping their toes in the water on BTC yield through selling of covered calls. So that's pretty cool that they're looking to do that as well. Again, that introduces another risk, puts you further out the risk curve, but you can make an argument that in selling covered calls, you're actually dampening risk. I sell covered calls for a portion of my income every month, and I know I'm limiting my upside, but I'm removing that downside risk. So it's a way to lower risk if done right. It can be useful. Now, if done wrong, you're going to get shares called away, or you don't sell close enough to the money, right, to make enough. So there's definitely risk involved in all that. But if they have a professional team that's helping them with getting that BTC yield from selling covered calls, I'm all for that. It's another lever. Okay. So that's basically what I wanted to cover today. And so when I bring it down to who has 5 levers and who I would buy, this is kind of where it stands right now. So there's not a whole lot of companies out there. By the way, I learned something new today. Cooler, which is on here, Cooler has actually invested in Bitcoin mining. They're doing stuff down in South America. It's not a huge amount, but they are investing in Bitcoin mining. So I moved their levers from a 3 to a 4. So again, something I just learned in preparing for today's call. So there's so much information to know. But as levers are added, pay attention to that. And so you'll see these things change from week to week. And again, it's not just the levers, it's the type of levers, and it's the being at $1 billion. So you really want your companies to be at $1 billion. You want them to already have had all the pipe shares get out into the market, all the converts, all that gets out and then flushed in, and then goes into stronger hands. Once you've gotten to that point, then you can really start being part of the conversation. Okay, so that's kind of where I have it here, and hopefully this was helpful, and we'll have definitely more to say next week because, again, there's so much happening on a daily basis. Thank you again for joining, and we'll see you next time.